Anil Jain is joining us. Mr. Jain, thanks so much. FY19 has been a good year for you with double-digit overall volumes, 15% revenue growth and a 20% jump in value-added products. Talk to us a little bit about that, kind of growth that you've had. While a lot has been said with regards to the value-added products, what else has led to that 4x jump in revenue when it comes to the piping business, for instance?
That's right. Yes, you're right. Absolutely. FY19 had been a good year. Of course, I must say that Q2 was a bit of a challenge, but we recovered in Q3 and Q4. Finally, we achieved our targeted growth of 15%. That's what we have been doing in the past 2 or 3 years. So I guess there is no reason why we should actually be deviating from the growth path. And in this year also, we expect the growth to be 15% or thereabout. As you know, we have got businesses in India and overseas. The local business is about 70%. And the overseas business is about 30% of the total revenue. We are seeing growth in both areas. So I believe we'll be agnostic in terms of the growth prospects both in India and overseas. Our different verticals, as you very rightly mentioned about the pipe business, which has grown at about 48% last year. Of course, the other businesses, industrial packaging and all also have grown. But our value-add businesses have shown growth higher than the regular business. And we are very happy about it because this business brings in us a higher EBITDA margin. So I believe as this business grows faster than the regular business, we should see the expansion in our EBITDA margins as well.
Anil, also wanted to understand, your PAT growth was led by lower depreciation because of the change in the deployment method and lower tax outgo as well. Do you expect PAT to grow at these levels going forward too?
As a matter of fact, yes, that was one-time correction that we had to carry out because we had overcharged the depreciation in certain period, which had been corrected. But I think we will be continuing with the depreciation policy, and the depreciation as a percentage of sale should be around the same as we have seen in this year.
Did you witness pricing pressure in FY19, given that volume growth actually outpaced revenue growth? What was the pricing scenario looking like, and what is the trend now? Has the movement in crude prices impacted you at all?
As a matter of fact, if you leave aside Q2 of FY19, I think we have been sailing pretty smoothly. Yes, of course, in Q2 FY19, we had a situation where the raw material prices went up quickly, and we took some time to adjust those prices. But after that, it's been a smooth sailing. In fact, in Q4, we have seen expansion in EBITDA margins. Insofar as the crude prices are concerned, of course, as you know, the polymer, which is the major input, have been agnostic again about the crude prices because most of the polymer today come from the gas route. As a matter of fact, we have seen a steady decline in the prices of polyethylene and polypropylene, which is our main raw material. And we are seeing right now the prices moderating and with a negative bias. So I guess next 2 or 3 years should be good insofar as the prices of raw material are concerned.
Plastic category, which contributes to about 70% of your top line and grew about 12%. Was this mainly on the back of increase in demand for plastic drums in the chemical sector? And more importantly, do you expect this trend to continue for your packing business in FY20 as well?
Yes, as you know, the packaging has been our oldest business. It's been growing at about 12%. Normally, this business grows about 5% higher than the GDP growth. So I think we should really be able to grow it as we've been doing so far. But also, I must admit that our overseas business is mostly the packaging business, and we are seeing a good growth there. So I think a blended growth of 12% on packaging business should continue. And I think you should see that the chemical industry is going through a consolidation phase in India. A lot of multinationals are coming in, and they have to source their packaging material locally. We are the dominant player in that space, and we surely are going to get benefited by this consolidation that is taking place.
Okay, currently the company has a capacity to generate about 200 crores revenue in MOX films, while the recorded revenue is about 100 crores in FY19, which is 50% of the capacity. So what are your expansion plans for this segment?
Oh, well, this year we will be actually utilizing our capacity a bit better than last year. And as we get closer to about 75 or 80%, that's when we will be looking for expansion. But I must say, on the other hand, our composite cylinders have seen a very good growth. We have a very solid order booking. Currently, we are going through a difficult time in terms of capacity not being available to meet our obligation. So if this continues, probably towards the end of this year, we would actually be expanding our capacity for composite cylinders. And that is one of our key businesses with good EBITDA margin and a lot of prospects in future. And as you have seen now, there's been in the newspapers that in India, the private sector players are going to be allowed for marketing LPG. We will be the biggest beneficiary for that.
Given the capex in MOX and the higher margins, what is your anticipated expansion in EBITDA margins as well going forward?
Well, I wouldn't predict that much. We have been running at about 15% or thereabout. I guess it will be between 15 to 16%, which is pretty good. But capex, we are expecting, if the regular capex has to take place, it will be about 200 to 220 crores, which is also maintenance capex and R&D. If we go for an expansion of our composite cylinder capacity, which is most likely, then probably the capex might go up a little bit more. But we are very clear that insofar as the debts are concerned, we are going to control them or monitor them very closely. Right now, our debt to EBITDA is about 1.46 times. We expect this to be around the same, though internal target is that our debt at any point in time will not be more than 2 times of our EBITDA.
All right, Mr. Jain, we'll leave it there. Thanks so much for joining us and talking us through some of the latest there at Time Technoplast.